Hello everybody, welcome back. What the hell happened? I thought 50 basis points was supposed to be a good thing. It is a good thing. Let's just get rid of this. And this. Pirate Bay. Only joking. Right, so yeah, what the hell happened? It was a buy the rumor, sell the news, obviously. Recognize how everything was moving up into and after the CPI. That was the market's pricing in the 50 basis point. Now, I personally priced in a 75. So I was kind of like, all right, let's sit back, let's chill, let's expect 75, because that's what I would have done if I was them. But no, they went for the 50. And yeah, for the most part, that's what I was saying on the Telegram, on the Discord. I put it out there. It says, look, if you're going to enter any new spot positions, maybe hedge them with some short positions if you're comfortable doing that sort of thing. So, like I say, it is what it is, but it's not the absolute downfall of everything, so don't worry about that. Let's just turn off all the everything, and we can still see that there is actually still an uptrend here. We're looking at this on the 4-hourly. This is still an uptrend. Low, high, higher low, higher high, higher low, higher high. We've still got a higher low in the making, and if we turn all our noise back on again, we can see a golden cross is forming here around 17,333. Is that a Mason's number? It is probably, I don't know, but if it is, it's not going to stay a Mason's number for too long because these moving averages are on the 4-hourly, so every 4 hours is going to move up a bit, and these are very significant supports. And so if we do continue to go down, there's a fair bit of support on the 4-hourly that are of significance. First one's already been tagged, which was your 21 exponential moving average. You got the 20 sitting around here around 17,500, and then obviously the golden cross, basically your 200 exponential is where you'd be looking at 17,333. So it's not the end of the world, so don't worry about that. However, the end of the world could take place shortly. Not really, but you know, it could get a little bit further downside, and that's what we should expect. We should expect a little bit further downside, even though we could bounce from any one of these. We could start to form lower highs and lower lows on the shorter term timeframes than a 4-hourly. Are you confused? You should be, because not only is there the rate hikes that took place yesterday for the US, the Bank of England are doing theirs today, so I've got myself a short position on that at the moment. S&P looking like it wants to fulfill this rejection from the top of the trend line. Again, everything bounced 2.0. We got in at the bottom, out at the top. This all was just sitting on the sidelines, watching and waiting. I still feel very strongly that we have found the low for traditional markets around here, but that doesn't mean that we can't meander around in this triangle. We've spoken about this for the most part of this week, just trying to hit it home to people that while in this is a bearish formation, but you can anticipate the lows like I have done. I expect this to be the low based on FX markets. And also inflation slowly but surely coming down, and now the Fed, not that they've pivoted, but it's a 50 basis points, so they want to slow it down for the moment. Slow it down. They're going to continue to do what they do, but they're slowing it down. So I strongly feel that this is actually the low. It might not be, but I have a good feeling that it is. And we were speaking about this, about the size of the triangle and the apex being all the way over here, and so far about 50 to 60% of the way through. A breakout 60 to 70 to 75% of the way through is pretty bullish, and so we've still got plenty of time into the first quarter of next year before we actually make that breakout, and that breakout being a convincing one. So it's not the end of the world. It looks okay. So let's have a look at the Dixie then. So the Dixie finding a little bit of a bounce around here. It's an okay area, I suppose, for it to bounce from. We've got, not that I want to have too many lines on the screen, but if we were to, we can see, what am I doing? We can see that there is a few bits of horizontal significance, bit of a toppy vibe, a bit of a supporty vibe, but it's not enough to warrant a trend line on there. So we'll get rid of that. More along the lines of this, which is back to our weekly, and we want to see if we're going to have continuation up, which we might do. I think we probably will, but if we are going to see that, we want to see the weekly close back above the 50 exponential. That would be a decent closure for the Dixie, and then the Dixie Bulls will be back in force, moving all the way up on this weekly, which the weekly is where we got the overall analysis on the Dixie anyway. We were expecting a pullback here, which we got, to a max of the 50 exponential, which we got. So we got into stocks, for the everything balance 2.0 at this level. 9% loss on Dixie, and dozens and dozens of percent gains for us on everything else. other than crypto not included because of FTX. So the wick has taken us a little lower, but if we can get sucked right back up here and close around 104.5, 104.6, that'd be a decent closure for DXY for continuation for maybe a few more percent. So 10 exponential 107, Bollinger Band Center 108.7 at this current moment in time. Obviously these have all got negative slopes on, so next week they'll be lower and the week after that will be lower than that. We base this on a weekly, so we don't expect these moves to take place instantly. We look at these on weekly bases. And at the moment the week hasn't closed yet. If it closes like this, not particularly bullish at all. If it closed a little bit higher than the 50 exponential, every possibility for a run on the DXY, which is kind of what we should be expecting, because that was the expectation when we got in at this level, you know, expecting a downfall, and when we got out at this level, expecting a bounce. So we were on borrowed time, and you know, the rate hike has shown us its true colors, which is that the market is priced in what, well, for the most part, what we priced in, apart from we priced it in way back over here, because we're amazing at this. So, long story short, let the pullback fulfill for Bitcoin, let it fulfill for S&P, and let it come down to its supports. It's not over yet. Now, the dollar going down and the dollar going up, that does have the inverse effect on stocks and everything else, but it's not the be all and end all. It helps you navigate the trading environment, you know, whether it's favorable or not favorable, or should I say, you know, good for shorts or good for longs. At the moment, it kind of is kind of undecided until the week closes tomorrow. Today might just be a bit more of a settling down of what took place yesterday, because it was a bit of a volatile move yesterday across all boards. But overall, I would expect, you know, just based on this 4-hourly, a little bit further downside before a decent bounce. Because again, we can't deny that this is still an uptrend, high highs, high lows above all major moving averages on the 4-hourly, and we haven't even looked at the daily. But the daily still looks reasonable. Above the Bollinger Band Center, that sits around 17,000. The 21 exponential, 17,250. So there's a fair bit of support on many time frames that are all below us at the moment, allowing us to actually bounce from those levels and bounce probably back into the box that we entered into yesterday. So it's still fine at the moment. There's nothing to be particularly concerned about. But with the dollar looking like it wants to have a little bit of a bounce, let that be so. Now, let's just quickly turn our attention to the dominance chart, because we were looking at this yesterday saying that there could be an alt season around the corner. So we want to see if we've hit that criteria yet, or if we've still got a bit of time to go, because this is where we should start to get excited. All right, so that's interesting. So we are actually a little bit above it right now. So a bit of an overreach at the moment. Fair enough. Fair enough. Right, so for the moment then, this alt season that we're anticipating could still easily take place. And we're talking alt season in the form of Satoshis, definitely, maybe not dollars, but definitely sats. We are at a level now where we should actually start to see a rejection. If we don't get a rejection at this level, the last thing we could expect would be a rejection around this, which would be 42% dominance. 42% dominance, I believe, has some horizontal significance to it as well. So a fair bit of toppy, a fair bit of supporty. It's kind of messy, but there is a line there as well. It's also your 200 simple moving average. But in order to get there, unless we get an immediate rejection, you would actually be looking for a pump signal generated on the Itchy Cloud. Now, I haven't really backtested this for the dominance chart. It is a signal all the same, so that could actually cause, you know, a larger move. So rather than jumping into altcoins at this very moment in time, I would say let's wait for a significant and decisive rejection on any one of these areas. If we get a rejection and start to close below these moving averages, 200 simple, then okay, we could look for trends on Bitcoin pairs. And we could try and play some of that alt season that we were referring to. But for the moment, the rejection hasn't taken place, and we're still looking for a bit more downside. So I wouldn't really feel comfortable jumping into any altcoins as yet. And you know what? If we don't get a rejection here, that's no big deal, because the biggest and the better alt seasons are taken from higher areas on the dominance chart. This is the best one that we did back in the summer, where we did 1 to 200% gains. If we were to move higher, then yeah, we'll be looking for more gains. You know, a little rejection from here could offer, like I say, with 10, 20, 50, maybe 100 if you were lucky. But the higher we go on this dominance chart, the more significant and long-standing the gains would be. So I'm all for this to move up. The moment we're not getting that rejection that we were looking for, so we can't enter into any shorts. I mean, any altcoins we still have to sit back and watch and wait. We do have a fair bit of bearish divergence that's kind of been cancelled out, I'd say now. So sit back on the sidelines, watch and wait. The central banks are speaking at the moment. The markets are listening. And that's fine. But as far as the trend is concerned, it's still an uptrend at the moment. Still an uptrend. It's not broken bearish, not yet. And really, it's just a matter of waiting for a support to get tagged, whether it's your 4-hourly golden cross retest. So that's 17,333, or a little bit lower to your Bollinger Band center on your daily, which is almost 17,000 flat as of today. It's not the end of the world, guys. It's not the end of the world. The main thing I would say is that we really do have to focus on the weekly closure for the DXY, and that closure might be taken seriously by markets. If we do get that closure, the size of the move could be as much as about 4% or so over a several week period, maybe leading us up to Christmas. But we haven't got that yet. We're anticipating that at tomorrow's close. Right. Hope you have a nice day. Take it easy.